$1 mortgage insurance. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. I've got my morning stein of coffee, and I thought we'd have a look at this article that was sent to me by a viewer from The Australian regarding, well, St. George's fantastic offer. $1 mortgage insurance for first home buyers. There you go. And this is to do, what risk are the banks taking on? And how much, I'd be interested to know how much risk there actually is with mortgage insurance. But nonetheless, this is a cost for first home buyers, an additional burden that you have to bear. I kept money aside. We wanted to make a lower deposit because we wanted to, do repair work on our house straight away. But then when we were told, the mortgage insurance cost, we just chucked more money at it, which kind of saved us money. It's sensible, but it kind of put a dent in our plans. So this is a big cost for first home buyers, for all home buyers, but particularly when you're just fighting to get into the market. So, down to $1. What does that tell you? Is the bank, certain there won't be any risk? Or maybe they're going to spread the cost around to other borrowers. Or maybe they'll scrape it back in fees and charges. Let's have a look. St. George has cut its lender's mortgage insurance charge to just $1 for first home buyers with a deposit of 15%. A move the bank says will help get some get a foot into the property door sooner. Here's the thing. When you're looking at property, there are all these other charges and fees that just slow down the process for someone getting in. It's an expensive process. It really is. And property, it's kind of a little obsession here in Australia, and it has shot up. It really has. So it becomes a challenge for people getting into the market. That means they have to save more, and that means there's less consumer spending. But they want to keep property at a higher value because it's good for the banks, it's good for everyone that has property, and it's good for people who've managed to jump on board to the property because they feel wealthier, and then they spend more money. The wealth effect. It's more effective in property than it is in shares. Lenders' mortgage insurance is sold to borrowers who have not saved a big enough deposit, usually at least 20%, to protect the lender from suffering a loss if the borrower defaults. There you go. There you go, right there. The banks are our friends. They're discounting it down to $1. Honestly, I would rather the banks do this than the government step in and guarantee it. I'd rather the banks assume the risk, the extra couple of $1,000. Can you get your deposit, your mortgage insurance back once you hit over a 20% deposit? Have you ever tried that? Or you pay off your home loan early? Good luck. Let me know in the comments if you've managed to get it back. Because you're buying it for the bank. Buying a home with a property value of $650,000 with a deposit of less than 20% could mean a one-off lender's mortgage insurance LMI payment of more than $6,000. There you go. And it adds up. It gets to the point where the insurance is so expensive, you might as well just chuck the extra money onto your deposit or save a little bit longer. But from Monday, changes to the St. George first home buyer loan offer will mean that eligible customers can put forward a deposit of 15% of the value of a property and pay just $1 in LMI. I've got no problem with this at all. I consider it part of the bank's risk in doing business, so I find in some ways it's rather cheeky that they're passing it on to the borrowers. It's rather cheeky that they're passing it on to the borrowers. And they'd probably get a cut from referring you to the insurance business. So I wonder how much of that $6,000 is actually just going to the bank anyway. I just wonder. Maybe I'm too cynical, everyone. Finance is a messy world with regards to just the kickbacks and the money that they're passing on to each other and referrals. It's like when a real estate says, oh, don't worry, I can recommend such and such to you. Are they getting a couple of $100? They're getting $500 just for sending you that way? Oh, use this conveyancing lawyer here, and they get a nice $500 backhander. Can't do that in the architectural profession because we're actually professionals. Oh, you probably could if you declare it, but come on. It could help a lot of first home buyers avoid costly mortgage insurance, and that's probably a good thing, Rate City Research Director Sally Tyndale told The Australian. Although we always say the bigger the deposit, the better the buffer you'll have and the lower your monthly repayments will be. So it's really important to not just jump at a particular deal. According to mortgage comparison website Rate City, Westpac-owned St George is currently the only bank to offer first home buyers with a deposit of less than 20% a better deal on LMI. However, CommBank and NAB are both offering loans under the federal government's First Home Loan Deposit Scheme, which provides loan guarantees for buyers with a deposit of 5%. So I would rather St George take the risk than the government take the risk. So the big banks, the really big ones, NAB and CommBank, they've got the government backing up these loans, paying these costs for them, essentially. Paying this insurance cost for them. Is that fair? They could definitely afford to take the risk. They could afford it. What are they going to lose? Potential loss if someone defaults on the loan after years of paying it off? You know. Crony capitalism, everyone. It's property. Chucking everything they can at property. Citing its own research, St George said the pandemic meant many Australians wanted to save faster for their own home, and 3/4 of people would now prefer to live in a house than an apartment. Well, yeah, that's the advantage of living in a house. With our big family, we've got the little backyard here, the kids can run around, we can get outside, while still maintaining a safe distance from our neighbours. You know? Australians have spent more time at home than ever before during the pandemic. And we're seeing a bigger trend to how the nation is re-evaluating their current living situation, St George Managing Director Ross Miller said. St George said 64% of first-home buyers expect to face financial problems leading up to their first property purchase, and nearly 3 in 10 first-home buyers are struggling to find a property that suits their needs. Well, maybe you just have to change expectations. This is the thing. People are worried that the property they fall in love with is the only one. There will be other properties. It's a big market, everyone. There's lots of houses around. You know, taking your time isn't the worst thing. Rents are getting very cheap at the moment. It's a competitive market. If you have a look on the community tab on my channel, a viewer sent me an email where, and they hit all the names, where their agent had sent them an email saying that the tenant wants to renew their lease for another 6 months at the end of this one, but they want a $100 discount. I mean, you can't blame the tenant for asking in this market. And it was an example where it was one apartment in many. There were many in the complex up for rent. That's the challenge when you buy these unique and special things, apartments where there are 300 of the exact same thing in the exact same spot. Research shows one of the biggest hurdles for first-home buyers to overcome is the time it takes to save for a deposit, despite being in the financial position to make home loan repayments, he said. And that's true. It's getting that big deposit. Getting that deposit. And this is where I'd say many people just feel hopeless. They feel hopeless. They don't see the end of the tunnel. They just think they're going to be in debt forever. They're going to be in debt forever, so they give up. So they give up going, well, I'm going to be in debt forever. I'm never going to own a home, so I'll just afterpay this toy. I'll get that smashed ab. I'll order those baked potatoes from Uber Eats. I can understand. You've got to break that down. You've got to break that down and just get a few wins. That's why the snowball technique for attacking debt is one of the smartest ways to do it. You know, attack the smallest one first. Forget about interest rates. Just hit the smallest one. If you've got like a $500 debt somewhere, hit that one first. Then another one. Then another one. Like some people have several credit cards and they go one after the other after the other. And then you start building momentum. And the savings you have from paying off one debt, you deploy to the other one. And the idea is, sure, it's not going to be as efficient as targeting the highest interest rate, but you're going to get the psychological benefit first. It's the same thing here with saving for a deposit. You just say, okay, I'm going to cut down from my normal coffee and croissant down to a 7-Eleven coffee. I'll get on the petrol station on the way to work every morning. And that, $6 difference I will put towards my savings. And every day I'll put it in there. And oh, look, end of the week, you nearly got $100. You do it another week. You do it another week. That's the trick. It's building those habits. It's building those habits. But I mean, we don't, is it even talked about in the media? I guess there's not even any discussion of having a rainy day fund. Well, I guess, hasn't rained much in Australia, has it? It's been too good for 30 years. We are seeing many pain points experienced along the savings journey, including giving up holidays, reducing entertainment expenses, having to move back home with parents, moving in with friends, or even leaning on family members to help top up savings. By reducing the expense of lenders' mortgage insurance, first-time purchasers may be able to afford a property that meets their needs sooner and save thousands of dollars. True, they could. They could. I really don't mind this at all. If I would rather this than the government step in and guaranteeing these loans. I would rather St. George take the risk. Because I imagine someone who's fighting for their first home, the default risk wouldn't be as high. A home, people do, here in Australia, people do whatever they can to keep it because we don't have jingle mail. You can't just send the keys back to the bank and worry about it. It's your problem. You're stuck with it. The bank sells it, then the difference you got to cough up for. So people fight to keep their homes. They'll do whatever they can. And maybe in some regards, they're a bit afraid to sell for a loss, so they hold on to things a bit longer than they should sometimes. We'll have to see, everyone. What is your take on this? Do you think this is a good move from St. George? Do you think they're just trying to rope in people with lower deposits? Or, would you rather this than the government stepping in and, big daddy government taking care of everything? Let me know your thoughts and opinions in the comments below, everyone. Please like, share, and subscribe to the channel if you're a fan and want to support the content I create here. There are a few ways you can. You can simply interact with the channel. It helps the YouTube algorithm know that you're enjoying the content and shares the videos around. You can support the channel via joining on YouTube or Patreon, using any of our affiliate links at Amazon, eBay, Independent Reserve, or Kucoin. Buying our merch from HeiseSays, you'll see the pocket squares right behind me, made by Rachel in this very house. Australian made, even Australian printed. We went down to Waterford West and we found a local manufacturer that could print them. That was a bit of a challenge. I'm still trying to find a place to get these made in Australia. I think I'm going to have to import them, everyone. It's just the way it is, unfortunately. Or you could support us using Gold Pass from the Perth Mint or via PayPal. Thanks to everyone who's watching the videos and supporting the channel. I really appreciate it. Have a great day, and I will see you all in the next video.